Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs. They are the leading CFD brokerage, and you can qualify for up to a 25% bonus as well if you open an account. If you do open an account, just send me an email and notify me. Alternatively, visit the educational website www.cfds.education to certainly learn more. And there is a app as well now where I send my analysis, and it's called Trade Signaler, and you can download that on iTunes and Google Play Store. Okay, right, the FTSE 100. Let's try and decipher exactly what's happening here in terms of the actual market itself, and let's see exactly where we're headed. Okay. Now, in terms of the fundamentals, overnight we had the Asian markets relatively weak. We had the Nikkei down quite substantially, almost 130 odd points, so down by 0.7%. We had the Hang Seng negative overnight as well. We did have the Shanghai down almost 3% at one point overnight until it actually reversed. So again, this is a negative sign, and given the fact that it sold off by almost 6% on the Friday as well, again it's a negative sign. Okay, so in terms of the actual market itself, again we are aware that there are ongoing tensions with regards to Russia and Turkey. We have the terrorism concerns originating from France, and certainly the terror alert certainly remains quite high and can and will be a concern in the background. Okay, now in terms of the actual markets themselves, we have had the Euro USD holding support thus far. We have the Euro, if I just bring the chart, the Euro USD, because the whole game is about the Kool-Aid or the QE trade, and that's where the markets are currently focusing on. Now, the Euro currently is trading at 1.0570 at present. Now, how will that impact the FTSE 100? Obviously, the moves in Europe obviously then do have an impact, or the movements in Europe, or the strength or weakness in Europe obviously has an impact on the FTSE 100. Now, let's try and tackle the FTSE 100 first and foremost. Now, in terms of the data of the weekend, we did have some dovish commentary from one of the BOE members, talking down a potential rate cut. Again, that is potentially positive for the FTSE. But given the fact that we had the Shanghai down almost 3% at one point overnight, and then we had the concerns with regards to the Nikkei and obviously terrorism concerns, etc., over the weekend, it did signal a potential risk-off bias. Not only that, we had the US markets relatively weak on a Friday, even with light volume. That's not exactly a good sign. Okay, adding the fact that we had the commodities certainly pushing low. We've had a test of oil at $40 overnight. Copper certainly weak ever since the Chinese metal story. So not exactly bullish overtly. Okay, now from the FTSE 100's perspective, we had weakness from the outset, given the fact that we had BHP Biliton hit with a potential lawsuit via Brazil. Okay, so again that was negative. I think it was anywhere in excess of around 7 billion, if I'm correct, and we had Aberdeen Asset Management as well, weaker earnings. So again, that certainly affects the FTSE 100. Now, we've seen a pivot low on the FTSE at 43330 this morning before we eventually got our reversal, and it's quite a powerful reversal of that. Okay, so let's try and decipher exactly where the FTSE 100 is from a technical perspective. Now, the 200 MA certainly seems to be the key resistance zone on the FTSE 100, so the resistance remains at 6390 on the weekly chart. Now, it has broken out this key diagonal trend line, but again, we have to take that in context with regards to fundamentals. Now, looking at the FTSE on a 60-minute chart, you can see that we are still respecting this diagonal trendline resistance. We've had a potential bottoming tail or a flush this morning, but that resistance certainly seems to be holding thus far. And again, given the fact that we have BHP, Biliton and Aberdeen Asset Management, the two bearish factors. Now, we have this key diagonal trend line that we're currently testing now at the 6375 level. I have actually gone short again on the FTSE from the 6366, if I can recollect correctly, on the FTSE. So I certainly have a bearish bias at present. So I have an average around 6367, 6368, if I can recommend at present. So again, looking for further downside on the FTSE 100. But yes, it has been quite impressive. I mean, the sell-off itself, you can see we had a sell-off initially on the back of BHP Biliton and Aberdeen Asset Management, given the fact that Nikkei was obviously lower overnight. And you can certainly see that commodities were getting crushed, given the fact that we had a pivot low at 263 on copper, and obviously a pivot low of 40.6 on oil. So you are looking at potential resistance. Now, we are coming into this gap fill resistance zone here, so the FTSE certainly has moved higher quite substantially and obviously has closed that gap. So it's all about gap fill, but we are into that diagonal trendline resistance on the 10-minute chart. The 60-minute chart on the FTSE 100, we had this bear flag. So the fair flag certainly played out quite impressively. We had a flush all the way down to previous resistance equals support at the 6330 30 level before we had this flush or move higher. But again, at present, we are still within this confines of this resistance or support around the 6330, 6340 zone, and you are looking for resistance above at 6390. Very unlikely for the markets to certainly push higher and move above that, given the fact that we've had Aberdeen Asset Management and we've had the BHP Biliton story weighing on sentiment this morning. Okay, in terms of obviously economic data out of Europe, German retail sales came out worse than expected, so that's certainly weighed on the actual European and the FTSE market as well. So certainly that's a cause for concern. The Aussie and Kiwi certainly weaker to a large extent, and certainly have pushed higher slightly overnight, but are into resistance. But they are into resistance, and therefore that's a potential risk-off scenario as well. Also, given the fact that if we cross-reference the FTSE now, let's look at the volatility index. You can see the volatility index has this bull flag formation looking for a new high. Okay, in terms of the FTSE oil share, you can see that we are still holding this resistance zone and certainly indicating weakness and no real follow-through in the FTSE itself. FTSE Euro Top 100, again, you are into that horizontal resistance zone. FTSE Europe itself, again, still an inside bar, no real commitment or move higher. FTSE 250, yes, quite an impressive move this morning. Very, very impressive on the back of potentially weaker sterling and obviously talking of a rate hike potentially delayed. But again, we are coming up or approaching that 200 MA on the FTSE 250, and that will act as potential or key resistance on the actual index itself. Okay, now the chart of oil, I think that's a key and the crucial one so far. The 10-minute chart, yes, we've had this thruster or move higher quite impressively. I did post a chart over the weekend with regards to oil having a potential IHS formation, but given the fact that we've had this news with regards to BHP, given the fact that China and Nikkei was certainly weaker overnight, and no real positive economic data to really propel the oil price higher other than potential geopolitical concerns, that certainly is an issue. Now, remember, when the oil price goes higher based on geopolitics, that's not exactly bullish for equities. It actually works out, even though it is a short-term move higher, it's not sustainable and eventually does cause the markets to sell off, given the fact that geopolitical fears and socio-economic concerns outweigh the bullish argument of a stronger oil price. Now, the dollar itself certainly seems to be well bid, certainly testing that 112.20 level, potentially even move higher. So again, certainly remain open to that. You have this bull flag on the dollar, and obviously that's bearish for commodities, and that's not exactly looking good for the FTSE 100. So unless we see real dollar weakness and real dollar capitulation, until then the FTSE 100 certainly will remain bearish. Okay, so again, bear that in mind and take that into consideration, especially with regards to BHP Biliton and the mining sector certainly feeling the weakness this morning. So I think that's a wrap in terms of summation of the FTSE itself. Economic data for the rest of the day. We've obviously had weaker retail sales out of Eurozone. That's not exactly good news. We have CPI data later on, although we've already had one gauge of inflation in Germany certainly picking up. We've got Chicago Purchasing Managers Index, pending home sales, Dallas Fed manufacturing data. So again, could be a market mover there. So all focus on the economic data that's due out shortly. But for the interim, be Aberdeen Asset Management and obviously BHP Biliton remain the drags on the FTSE 100, and certainly will cause weakness for the FTSE and certainly will push the actual FTSE 100 lower. So all eyes on the FTSE, given the fact that the mining sector, as you can see here, has broken key support and potentially moving lower. Okay, it's not exactly a good sign. Okay, again, the oil and gas sector holding resistance and looks like it wants to move lower. So certainly risk off from my understanding and my perspective, unless obviously the QE or stimulus trade really kicks in and we start to move higher. Okay, folks, that's a wrap. Take care, goodbye, safe trading, and be sure to visit cfds.com.